The solution to all of New York's housing problems, and probably housing problems everywhere in the country, is simply on the supply side. And even if you are a socialist policymaker and you don't believe that Econ 101 works, look no further than our pandemic. We had so many people leave the city that vacancy rose very significantly. Vacancy rising is just like adding supply. And rents in Manhattan during the pandemic dropped by 30%. There's not a housing policy that's been implemented anywhere in the United States where rents have dropped 10%. And we had rents go down 30%. So build more housing. And the IAI was for improvements that you made to the individual apartment. Put in a new kitchen, new bathroom, new flooring, new walls, new appliances. These incentive programs returned 30% on invested capital in the form of increased rents, such that by 2019, that 14% dilapidation rate had fallen to 0.04%. So you talk about effective policy. That was really effective policy. And what do our policymakers do in 2019, June? They marginalized both of those programs. So now there's a disincentive to invest in the housing stock. So
and we are live again. I think you missed us for the past few weeks. We haven't done a live episode right here in the studio with a super amazing guest. We've been looking forward for a very long time, for months, to have him back on our show. He's a returning guest. Want to thank our sponsors from Kairos and Coastal Painting Contractors for making this broadcast possible. With this being said, Chris Moreno, take it away, sir.
Thank you, Adrian. And really excited today to have really an icon in real estate, Mr. Bob Knakal, who has pretty much mapped, I believe, we'll get into this a little bit later today, but pretty much mapped, I think, all of New York City, and has probably done some deep diligence across other cities as well. Maybe one of the most knowledgeable people about infinite niche knowledge banks of within real estate. I think he's now brokered, I think, something over the number of 2,300 properties in New York City, more than any individual broker ever. Bob also is the founding partner of Massey Knakal, which was the number one building sales firm in New York City. And now, what's pretty awesome is since his work from 98 all the way to 2014, they did over 6,000 transactions in excess of over $23 billion. So I love going deep with Bob, especially Bob on the commercial, but also the multifamily side. So love to maybe start off by kicking it off today a little bit about, what you're digging into now with the AI. Everyone talking about, AI is the hottest word on the market right now, prop tech and real estate. But we'd love to hear how you're thinking about AI as it pertains to real estate. And thanks for joining us.
Yeah, well, first of all, Adrian, Chris, thank you so much for having me back on. It's always great to be with you guys, and hello to everybody out there. Yeah, and I appreciate that intro. Last week, in fact, I closed deal number 2,348. So we're continuing to go with my new firm, BKREA. We have a particular focus on development properties and redevelopment opportunities, property conversions, things like that. So, back to the entrepreneurial roots. I started my new company, BKREA, about a year ago. And we're having fun again. So it's been great. And Chris, to tag on to your point about AI, yes, we're using AI in a big way. And I guess the way to tee it up is that the world has changed so much. 1988 or 1984, actually, when I started my career, I had no computer on my desk, no cell phone, no fax machine. We carried rolls of quarters around in our pockets to make calls from a payphone. I don't think you can even find a payphone anymore. And the world has changed so dramatically over the past 40 years. But I think the extent to which it's going to change over the next 5 is going to blow the past 40 away. Realizing that when I decided to start my own firm, the first person I hired was an AI guy. I hired Seth Samowitz as my COO. Seth is an AI guru. He started AI companies. He worked in driverless cars for 6 years. And I figured, hey, if this guy can make a car drive itself, he can help me sell buildings. So we are using AI in a big way. We're using it with 3 different functionalities. One is in the prospecting process. Secondly is in the deal execution process. And thirdly, with regard to data interpretation. And the first two ways, prospecting and deal execution, are really nothing more than funneling processes. We're going from thousands of people down to hundreds, down to dozens, down to a few. AI makes those processes much more effective and efficient, and are wonderful for that type of function. And then the third way, which really is the most powerful way that AI can be used, is in interpreting data. Unfortunately, while that is probably the most powerful application AI has, it's going to be the most difficult for the industry to use because most data sets are not very good. The important thing about data sets is not the absolute numbers themselves, but the relationship between the numbers in a data set. And the relationship between numbers in a data set lose integrity if the methodology for calculating the data is not 100% consistent from start to finish.
Are there any solutions to that, Bob?
Creating your own proprietary data. I mean, unfortunately, we have two data sets that are incredible. Our land value data set and our multifamily data set both go back to 1984. I've calculated those numbers using the same exact methodology back to the early days. And so the integrity between the numbers within those data sets is very, very strong. And so we're applying AI algorithms to the fluctuations in the numbers within that data set, and it's producing some really unbelievable stuff.
If you were to put a price on a data that you've been harvesting all these years, how much do you think it's worth?
Well, I wouldn't sell it for less than $20 million, truthfully, only because nobody else has it, and I don't think anybody else actually could create it. If you think about, when we were putting together the Knakal Land Index, we said, well, should we make this available on a subscription basis to people? And I was like, why would we possibly do that? Well, what are we going to charge? $1,000 a month, 2,000, even 10,000 a month. Why would does that make sense when that data can win me a transaction where the commission might be $2 million? It didn't make any sense to do any subscription basis with it. It's very unique, but it's one of the reasons why I tell people, as a broker, the best thing you can do is create a proprietary data set. The third-party aggregators make their information available. Who knows how they're calculating it? If you just go to a third-party aggregator to pull a report, a sixth grader could go to that same aggregator and pull the same exact report you can. So how does that create value for your client? So I'm very, very big proponent of proprietary data.
I want to get your take, obviously, right now, as we're looking at, and data is so crucial, especially when you're working with an owner who has a certain expectation of what their property's worth and someone else who has an expectation of what they would like to pay for it. And it seems like over the last year or two, there's been still a wide margin between the two. So how do you use that not only maybe for your clients, but to help the sellers to get more connected to what reality is and the buyers to get to where the seller wants to sell it at? How do you think about that relationship using your data?
That's not just a recent phenomenon, but that's been a phenomenon at least since 1984 when I started, and probably for decades and decades before that. One of the things that's helpful for us is my value proposition has not changed one bit since I started in the business. I only sell buildings, I only represent sellers, I only work on exclusives, and I only work in New York. And that keeps things very simple. I don't have conflicts of interest, and often I have to try to illustrate to a client why their property is worth what I think it's worth. It's a lot easier to do that if you have a lot of data to back it up. And so, again, very, very data centric. And, if you're explaining to somebody what their land is worth, and you say it's worth 400 a buildable foot, and they think it's worth 500 a buildable foot, and you can say, well, look, here are 3 sites right in the neighborhood within a few blocks that just sold for $450 a foot, and these were all corners, and they were bigger, and they had more efficiency with what you could build on them, and better zoning. How can yours be worth more than these? And it's always a challenge. It always will be a challenge, but that conversation is a heck of a lot easier when you have data to point to as opposed to just an opinion.
A lot of money was sitting on the sidelines waiting for the election results. This was towards the end of the last year, like the last or like past 6 to 9 months. That's what I've been hearing all across the country. Now that the elections, everything's being settled, what is the sentiment out there? Are you seeing more transactions? Are you seeing more willingness for people to do deals? What's your take for the New York market?
Yeah, well, what I would tell you, Adrian, is that I think in New York anyway, and I don't know anything about markets outside New York. So unfortunately, we're just going to talk about what's happening in the New York
Sure.
market. But I can tell you that what's happening in the market varies very, very widely, product type by product type. In fact, that's one of the interesting things about the market that we're in today compared with other markets that were in downturns. And I think we're generally emerging from the downturn. But I will tell you that during other downturns, every property type was losing value, just to different degrees. Today, different product segments are moving in different directions. Our retail market is extraordinarily healthy. It was negatively impacted years before anything else was, but it is recovering very nicely. The general perception is rents have stopped going down. In fact, they're going up in some areas. Leasing activity is picking up. The perceived downside in retail is very small, so that sector is doing great. Our industrial market doing very strong. Our land market is on the upswing. The hotel market in New York is thriving. We've lost about 30,000 of our 120,000 hotel rooms to conversions and to migrant occupancy. The city has cut down very significantly on Airbnb rooms. At one time, we had as many as 27,000 Airbnb rooms in New York City. There's only 3,000 today. So a combination of these factors have exerted tremendous upward pressure on ADRs. Occupancies are very high. And so that market is doing really well. Then on the other side of the coin, you have our multifamily sector, which got its first gut punch in June of 2019 when the rent laws changed very significantly in opposition to owners' interests. Then the interest rate environment has really hurt those buildings very, very significantly. There are many people who can't afford to refinance their properties today. They are forced to sell. And so we're seeing a lot of that. And in the B and C office space, again, a market that is very, very challenged. And it's important to differentiate between Class A new construction office, which is doing really well in New York. There seems to be a very, very high demand for new product. But older B and C office that's functionally obsolete, it's still facing challenges. We have leasing activity picking up a little bit, but interestingly, values are still heading downward, and refinance risk is a problem in that sector as well. So it depends. How's the market? It depends which market you're talking about. And so, different sectors are moving in different directions at the same time today.
Yeah, I think one of the big things, Bob, as you talk about it, right? It's location, location, location. Comes down to not only a market, the type of property, but also the submarket in the neighborhood, right? And probably the street corner. I'm sure you could go deep on that. I'd love to know, how do you think about the psychology of a successful deal and bringing parties together to be creative? Like, as you were mentioning now, I think one of the things I'd love to hear you talk about is how creative can you get? Because I'm hearing people get really creative and meeting with some owners this week and some people who've raised a couple $100 million to go out there to rescue some of these properties. So maybe could you share, without maybe sharing the names, some of the creativity that you've seen and maybe that you've even helped to broker?
Sure. Well, I mean, there are a number of things, and I think it's important to always be very, very on top of what's happening legislatively, because that's impacting things very significantly. Like in New York, our land market, as I said, is doing very well. It's on the upswing. We have a new tax abatement program called 485X. We have a new tax abatement program to incentivize the conversion of older obsolete office buildings into residential called 467M. We have a new affordable housing program called UAP, which stands for Universal Affordability Program, where you can increase the buildable density of sites. And one of the things that's great about New York from a zoning perspective is that it's an as-of-right zoning jurisdiction. So every site is already entitled. And what these programs are doing is giving you additional density over and above what sites are entitled for if you put affordable housing on the site. So we are, one of the things that I've done, which I think has been very, very helpful to our clients, is I put together a policy and zoning SWAT team, a data guy, a policy guru, a zoning attorney, an architect, cost estimators, people who are really conversant on a very, very granular level with all of these incentive programs so that we can look at a site. And again, as someone who only represents sellers, all I'm trying to do is maximize the price of every single property I'm selling. How do you do that? Well, you figure out, okay, are there programs available to increase the density? Could you buy air rights from an adjacent property? Are there landmark buildings in the district that now have more flexibility under our new City of Yes legislation that will enable you to buy those air rights more easily? So we look at everything from every angle, figure out how to maximize the value of the particular site, and then just try to get the highest price possible. And don't mean to sound callous in any way, but I'm really very agnostic as to who the buyer is, and don't really care whether the buyer makes money or not. Just want to get the highest possible price for my seller, and if I've done that, and if one side of the transaction's happy, I'm happy. If the buyer is happy as well, that's just an added bonus. But the number one, I have to make my seller happy, and the way you generally make sellers happy is by getting a really fantastic price for them.
Bob, rent control. New York is known for their rent control policies. How does that affect the quality of the product, and how does that play into the transaction field? Is it helpful? Is it not so helpful?
Yeah, it's not helpful at all, other than they're so draconian that it's forcing some people to sell, which is helpful from a transaction volume perspective. But I will tell you that I've never seen an example where price controls are actively accretive to a market. They create shortages, they create a misallocation of resources, and the New York City housing market is no different. I'll give you one example, one of many. In 1977, 1978, the dilapidation rate in the New York City housing market was about 14%, meaning that 14% of our apartments were deemed uninhabitable because of their condition. So the city wisely created two programs to incentivize the private sector to invest in the housing stock. One was called the Major Capital Improvement Program, otherwise known as MCI. The other was the Individual Apartment Improvement Program, known as IAI. The MCI were for improvements that were building wide. You put in a new boiler, put on a new roof, put new windows in, renovated the hallways, renovated the lobby. And the IAI was for improvements that you made to the individual apartment. Put in a new kitchen, new bathroom, new flooring, new walls, new appliances, things that improve the apartment. These incentive programs returned 30% on invested capital in the form of increased rents. What happened was that because of this, you had the private sector dump tens of billions of dollars into the housing stock, such that by 2019, that 14% dilapidation rate had fallen to 0.04%. So you talk about effective policy. That was really effective policy. And what do our policymakers do in 2019, June? They marginalized both of those programs. So now there's a disincentive to invest in the housing stock. So estimates are anywhere from 60,000 to 80,000 apartments that have been nailed shut because it does not make economic sense for the owner to renovate the apartment. So, I meet with elected officials all the time. Recently, I met with our mayor, I met with the governor, and I said, look, you want to do something that is economically stimulative, you want to create jobs, create tax revenue. I said, just all you have to do is bring back the MCI and the IAI the way they were. And you'd have tens of thousands of apartments under gut renovation within 2 weeks. How much flooring are you going to sell? How much sheetrock? How many stoves and refrigerators and toilets and sinks? And I mean, come on, this would be unbelievable. All the jobs that you would create, and it's like water off a duck's back, not sinking in, and it really is a tremendously poor housing policy. The solution to all of New York's housing problems, and probably housing problems everywhere in the country, is simply on the supply side. And even if you are a socialist policymaker and you don't believe that Econ 101 works, look no further than our pandemic. We had so many people leave the city that vacancy rose very significantly. Vacancy rising is just like adding supply. And rents in Manhattan during the pandemic dropped by 30%. There's not a housing policy that's been implemented anywhere in the United States where rents have dropped 10%. And we had rents go down 30%. So build more housing. Couldn't be more clear. The problem is that we have a political system that discourages policymakers from wanting new supply in their districts because it brings in new people that don't know them and might not vote for them, and that's where the whole thing falls apart.
You're making too much sense here, Bob. Uh, my next question is about the deals that are underwater, especially multifamily. What percentage would you say that there are deals that are underwater, distressed, like owners that must sell before they lose the assets to the lenders, to the bank, of all the total deals that are on the market right now in New York?
Yeah, look, I think for multifamily, the overwhelming majority of buildings are effectively underwater. If they were to be refinanced, if you just think about the relationship of how the numbers work in multifamily, a lot of these folks have debt at 3 or 3.5%. And let's use an example. You have a $50 million building, you have 30 million in debt on it, and you're paying 3%. If you're going to refinance that building today, you probably have to put 25 or 35% fresh equity in, because nobody's going to refinance you at 30 million. They'll refinance you at 22 million or 20 million. So you have to put fresh capital in. And based on where rates are today, your mortgage payment is actually going to go up. So a lot of these buildings just don't work. And I can't tell you how many owners I've spoken to that said, Bob, I've negotiated with my bank. I'm still managing my properties, but my equity's been completely wiped out. They're getting 100% of my cash flow. Like, what the heck am I doing? Why am I doing this? My management fees are capped. So I'm just basically working for the bank. And why don't I just go to Florida and sit on the beach? Why am I doing this? It is very, very problematic.
I used to, crazy enough, I used to live in rent control in San Francisco. And it was wild because, to your point, it doesn't look at the person, it looks at the unit and essentially penalizes the person. So I agree, we need more supply. We need people like you, Bob, going to Washington, D.C. and advocating for the industry, because, it's people like you who can help tell the story, do some of this common sense. I'm curious because obviously you've done a ton of office, but you've also done a ton probably of retail, at least on the bottom of the floor of the buildings. And then, of course, multifamily. I believe, like when Adrian and I have gone to New York, and I love Hudson Yards, how they've got the food and they've got the gyms and they've got the childcare and you've got Javits Center and incredible things you want to visit, like the sculptures. And then you've got the housing and the office. And it seems like that model of creating everything in your life within walking distance could be, like, you've done it so well in New York, but I feel like it could work so well in other cities too. So I want to get your take around when you have an area, let's say like Wall Street, that was predominantly hotels and office. And like you said, after COVID, it kind of became a little bit of a ghost town because there wasn't much housing there. Is that something that you think, do you think that housing needs to be for the long term to help office? Does there need to be adaptive reuse? Does adaptive reuse make sense?
Yeah, I think that very mixed use neighborhoods are accretive to quality of life. And let's face it, people like to walk to work. People like to shop within a couple of blocks of where they live and be able to walk to the store. There is, and downtown, actually, the transformation of downtown in New York happened really right after 9/11. There was a tax abatement program in place called 421G that incentivized the conversion of office space to residential. On 9/11, I think there were only about 1,800 apartments down in the financial district. This 421G program incentivized the creation of new units and the conversion of office to residential. And it produced, now today, there's over 30,000 apartments down in the financial district. So it's really changed the nature of that market. I think that this is a great solution for a lot of places. I mean, if you look in the suburbs around New York, you have residential neighborhoods, and then you'll have a commercial street, and maybe you have one area where you'll have some industrial buildings or some office buildings, and they're not really as mixed use as a very dense urban area might have. But I think to the extent that you can create these mixed use environments, that's very accretive for the people living there and for the tax base, for the municipality, et cetera. Like a lot of these big regional malls, people are struggling to figure out how to make them work. But if you think about it, most of these malls are extraordinarily well located. They're by 2 or 3 highways, giant pieces of land. Build some housing on that property. Then you'll have better traffic in the mall, and put an office building there so people could walk to work. And, I think that kind of thing is a good solution when you're looking to create stable environments where each particular functionality actually is accretive to the others.
Bob, one of the things that we're hearing very often lately, it's fraud. Unbelievable levels of fraud. Applicants that, are using fraudulent methods to get an apartment, and of course, they get to stay for free for a number of months. I just heard in a conversation like just last night that in Atlanta the levels are up to like 60% of all applicants are fraudulent applicants. Do you hear this from any of the firms that you're working with, and how rampant is it in New York, if it's a phenomenon at all?
Yeah, I'm not all that aware of that. I know that the process for folks to qualify for the affordable component of a building, they scrutinize the tenants very significantly. In fact, to the point where, in a new building that's an 80/20 or a 70/30, with the majority being free market and the minority position in the building being affordable, the market rate units get rented up in 6 months, and it takes 2 years to fill the affordable units, even though for 100 apartments there might be 28,000 applications. But I believe that in New York they do heavily scrutinize those. So I haven't heard much about the fraud that you're referring to.
And now a word from Dean Fungawing, founder and CEO, Kairos.
Next is this fire protection, solution around kitchen fires, right? Again, we are not by any means saying that this is replacing your fire suppression system. This is replacing your building's fire protection systems, which are all regulated by, fire departments and local codes and all that, right? You still have to have all that. But I'm telling you, there's actually a step before any of those systems go off. And that is just knowing what the temperature in that kitchen above that stove is in real time. You knowing that is the difference between you stopping a fire in an apartment and not. If you knew that apartment was 100 degrees, Adrian, you could get to it with a fire extinguisher. You could wake up the resident, open that door, get in there, solve that problem before it spreads to the whole building. Again, you can also notify the fire department just by the moment that kitchen's over 100 degrees, notify the fire department via text message, email, phone call. You can notify your local building engineer, your maintenance staff, your property management team. Everybody needs to know the moment that apartment's over 100 degrees. Simple solution to a problem nobody ever wants to think about. But this is a life safety issue, and it's no one else's responsibility except for a building owner, to make sure that we take care of that building and make sure we protect residents. So we're here to help if that's something that folks are interested in.
Yeah, I've been hearing it. Obviously, it can be so unique, the problems from one market to another. Obviously, insurance being a big issue for certain sectors in certain areas of the country. Bob, you get to see so many cool things. I think one of the great things you do is you create experiences for people, whether it's an experience at an event that you're at, or if it's something that you leave behind with them. And one of the such experiences was a great memory when you were here in Atlanta. You signed the giant Knakal baseball card, which was epic. And then I think they even had a cake for you, and it had your long flowing hair, which was incredibly memorable, right? You never forget those moments. And by the way, when you spoke to us, it was the first time that we met you in person, which was phenomenal. But I think you understand the connection, the real human connection that will never be replaced by AI. And so I want to get your take around, because I believe commercial real estate had a tough time. There was just this shift to the best locations. People move from the bottom floors to the top floors. In apartments, they move from like you said, the class C or tougher communities, they move to the safer ones where they have the technologies. So I'd love to get your take. How important is experience? How important is the components beyond what you can actually sometimes put an ROI on? That feeling of safety, that feeling of a great neighborhood, that feeling of that office building with the most incredible view. How do you think about that? How does someone underwriting and thinking about the experience when you can't necessarily put an ROI on that experience? Like, you can put an ROI on the revenue coming in from parking. You can put an ROI on the rents. But how do you say, if I'm going to put more money in, or I'm going to think about adding more technology to a property, how that ROI, because that ROI is more sometimes of a feeling or to attract someone over. So I think that's one of the things of like the ROI of creating a baseball card. You're not going to see the ROI on a dollar amount if you spend $10,000. But what is that? Why do you do those things?
Okay, well, I'll answer it in this way. And I've never been asked this question, so you're making me think on my feet here. But what I think is that when you talk about real estate, your ROI stands for return on investment. And when you think about the different components that you might put in an apartment building or an office building as an amenity package, or to make the experience of working or living in that building different, there's a return on investment for the dollars that you spend on those amenities. When you're talking about personally or from a market presence perspective, ROI stands for return on involvement. So what is your return on being involved in a certain thing? And that, you mentioned the CCC event I was at in Atlanta. That was a great event. And, so what was my return on involvement being at that event? Well, I got to meet a heck of a lot of people. It was effectively a coming out party for me. I had just been fired the day before. I think a lot of people were expecting I wasn't going to be there, but I said, what the heck? I got no place to report to for work. May as well go down to Atlanta, meet some real estate folks, talk about real estate. Brought a bunch of my baseball cards and signed them. And I think, part of what you want to do when you create the experience, you kind of think about how people feel when they interact with you and what's their ROI on being around you. Do they have a return on being involved in the events that you're at or chatting with you or what have you? And I think, you always want to try to make that interaction memorable in some way. I like telling stories, particularly about deals. And as I try to do that on Tuesdays, I always talk about a deal story and what happened behind the scenes. I mean, I think a lot of folks in our business will say, hey, I just sold 123 Main Street and it was 100,000 feet and it sold for $20 million. That doesn't really tell you a heck of a lot. But what were the unique things that the seller was facing? What were the hurdles that the buyer had to overcome? What were the things that made you pull your hair out as a broker that you had to be creative and work around? And those are the things that I think really resonate with people, because there's always the ability to apply a strategy or a tactic that you hear someone else use to a situation that you're going to encounter. Every building is different. Every person is different. There are different situations that pop up, but in the scope of of things that come up on real estate deals. There's a finite number of them. And maybe there's hundreds, maybe there are thousands, maybe there are tens of thousands, but it's a finite number. And when you have a circumstance that comes up, if you've paid attention to what other people have done and how they've done it, you probably can apply some of what you've learned that other people went through to what you do. So I think it's a great learning experience for people to see what's happened on other transactions, how you've overcome certain things. And like one of the things I love now is at my new company, I sit in a cube and I sit right in the middle of the trading floor. And I often take my phone calls on speakerphone because I want everybody around me to hear what's going on. You know, how am I talking to people? How am I overcoming things? What are people saying? And I think that's the best learning experience we can have. Is one thing to sit down in a conference room and theoretically talk about something, but to actually hear it being used is a completely different way of understanding or having it seep in a little more strongly. So, you talk about experiences. I think it's being authentic, being real, treating people the right way, and learning from what other people have done.
I was having a dinner this week with a few folks who had as many as 35,000, units and a couple hotels, and now have reduced their count, but now they're going back out to the market. A lot of our listeners on this program have capital, they're investors, or they're management, a lot of different worlds. But, I talk a lot about, and I've learned a lot about from you, because I love to learn from people who've been through the cycles and seen the good, the bad, the good, the bad. And you've seen every scenario like you talked about. So could you take us through maybe one of your most memorable transactions of maybe, something that could possibly pertain to commercial and multifamily, since our audience is a little more on the multifamily side?
Yeah, well, let's see. I mean, so many different scenarios that have come up. I'll tell you one of my favorite deal stories was a small mixed-use building at 41 West 47th Street on the Diamond Block. And that's 47th Street between 5th and 6th Avenue. Almost every business is jewelry related, diamond, gold, that kind of thing. And this was a non-jewelry building. It was a bookshop on the ground floor. The owner of the bookshop owned the building. He had a couple of apartments upstairs. For years, everybody knew that he was going to be selling the building at a point in time. He had converted a C Corp to an S Corp, had to wait 10 years for the S Corp benefits to kick in. But meanwhile, he was telling everybody, I converted from a C Corp to an S Corp. I'm going to sell in 10 years. I'm going to sell in 9 years. I'm going to sell in 8 years. And so everybody was circling the wagons trying to figure out how they could get into this guy. And he called me up one day and said, Bob, I got about a year left before my S Corp benefits kick in. And I'm being called by, dozens of people every week. I need help. I need you to help, sell this building for me. It would take care of everything. His name was Andy Brown. Andy hires me to represent him. And we're having all kinds of crazy proposals made to us. People want to pay X for the building and give some cash, green cash on the side. People want to buy the building for X and give some gold bars or some diamonds in addition to the price, all kinds of crazy things. And every time I went to Andy and said, hey, Andy, this guy offered this kind of deal. Oh, yeah, that guy, he tried the same thing with me. Crazy stuff going on. But everybody was trying to get an advantage in terms of figuring out what he was going to do. And I think people who wanted to buy the building, would make a bid, but then they'd have their cousin make a bid $200,000 less, and their sister-in-law make a bid $400,000 less. And I mean, we had an insane dozens and dozens of offers on the property. It seemed like we were stuck at a certain point in value. It seemed like people around the market knew what our bids were. This was the day of the fax machine. We were faxing offers over to Andy all the time. And as it turned out, the two different people were paying employees of the bookshop to read the faxes before Andy got to them and say what the bids were. So the marketplace knew what the bids were. We're so curious. We didn't know at the time that the employees were leaking the information. But I said to Andy, look, let's just have a sealed bid process, and I'll bring the offers over and we'll go over them and see where we are. We arranged for a sealed bid, and we're right across the street from the building having lunch, and the cashier says to Andy, "Oh, Mr. Brown, I hear you have a bid deadline today, and that your high bid's going to be $5.5 million." We're like, what? The cashier is telling us this? And sure enough, we open all the bids, and we had two top bids, both $5.5 million. I'm like, Andy, something's not right here. We have to just go silent on the market. Just look, have your attorney start drafting up a contract, and he would have sold at $5.5 million. But I said, too much. When the cashier at the deli knows what the top bid is, and we have sealed bids, something's wrong. So I said, look, have your attorney start drafting a contract. Because we have two high bids, no one is really the high bid. That one of each of the $5.5 million bidders was not the high bid. They were one of the high bids. So I said, what we're going to do is go back to everybody and say, you were not the high bid, and we're drafting a contract, which is completely truthful, wasn't a lie. I said, Andy, we're just going to sit for 2 weeks and see what happens. So we go back to everybody, say, hey, you weren't the high bid. We're drafting a contract. 2-3 days go by, we don't hear anything. The fourth day, one of the bidders calls and says, hey, well, what's going on? And I explain the situation. We're drafting a contract. He says, well, what if I offered $5.7 million? I said, I don't know. I'll go to the owner and ask him. He said, hey, Andy, Joe is, willing to pay 5.7. I said, let's not respond. A day later, another different buyer calls, hey, what if I offered 5.8? Just go through this. We waited, we did this for 3 weeks and ended up selling the building for $7.5 million to the neighbor.
Unbelievable.
Incredible.
So
Wow.
that was quite a story.
Heck of a story. Yeah. Very cool.
That's an amazing story. Bob, I'd like to take a question from the audience. It comes from Michael. It's not my area, obviously, but could be yours. What's your opinion on Roosevelt Island development?
Roosevelt Island? Well, I don't know all that much about it. I have never sold a property on Roosevelt Island. And for those that might not be aware of what that is, Roosevelt Island is a relatively small island in the middle of the East River between Manhattan and Queens. And there are a lot of affordable housing properties on Roosevelt Island, a lot of regular apartment buildings. There's the Cornell Tech and Technion school campus there, which actually during the Bloomberg administration, they had a contest to see what school wanted to go there. Apparently there were two very strong bids, one from Stanford and one from Cornell. And they should have done two rather than doing one, I think. But Roosevelt Island seems like, I don't really know much about it, but it seems like they have, it's a pretty thriving place with a lot of good housing.
Yeah, it's interesting because the Roosevelt Island, that's where you can ride across the, is that the one where you can ride across the
Roosevelt
water?
Island has a tramway that you can go basically along, right next to the 59th Street Bridge, otherwise known as the Queensboro Bridge, to get to Queens.
Amazing. Yeah, I've always seen it, never ridden it, but that's the thing about New York. That's what I love. You go there, you can try new stuff every time, new food, new experiences. We still got to get to the infamous map room. Want to hear? So I think I saw you posted the map room has moved. Is that right? And tell us more for those who don't know about the map room, what it is.
Yeah, well, the map room is a room where a map resides that is the product of me spending 220 hours during the pandemic walking every street of Manhattan to create a log of every building under construction, every site that had been demolished, potential development sites, and assemblage sites. And subsequent to doing that walking tour, we followed up with thousands of hours of research. And since that time have tracked every demolition permit, foundation permit and building permit the city has issued. So we're constantly updating the map. But I did the map during the pandemic when I was at JLL. I highlighted the map in different colors for different things based on not wanting to have to be out in the field just writing. So it was easier just to highlight stuff. I started taping pieces of the map together to see what was happening in certain neighborhoods. And before I knew it, I had a map that was 24 feet long and 10 feet wide. It was everything you possibly could want to know about the development market in Manhattan. And went to the folks at JLL and said, "Hey, I have this giant map. Can I have 600 feet to put the map?" And of course, the answer was, "Well, if we give you 600 feet, we have to give everybody 600 feet. So forget it." So I went a few blocks away, rented a space that became known as the Knakal Map Room, and it was about 600 feet, and displayed the map there. And I actually, since the map was created, I had been working 3 days a week in the map room, 1 day a week in the JLL offices, and 1 day a week from home. And then after I was fired, went over to the map room, was making prospecting calls 10 minutes later. And now that the new firm, BKREA, is growing, we needed new space. So we moved a block away, but still in the heart of the Garment Center. And this is where all the action is today. A lot of development and redevelopment going on here. So we're happy to be in new, larger quarters for the map, in the middle of an area that is going to be significantly rezoned and have a lot of activity.
Another great question from the audience. This one comes from Jason. Jason says, "You deeply understand the importance of a personal brand. Does branding a building with a name, color scheme, logo, etc. increase the value?"
I think it can. I think it depends what the brand is and what the logo is, what the colors are. But I think that a sense of place is important, and I think branding is important. I think market presence from a broker's point of view is very, very important because you want to create a brand. And how do you do that? You do that by making prospecting calls and sending email blasts and text blasts and sending hard mail, a very underrated method. Also creating content, being on social media, doing public speaking, doing podcasts, doing things to be out there. Because, if you follow me on social media, I'm a big believer in the fact that it's not who you know, it's who knows you. In New York City, the market's so big, we have 165,000 investment properties. There are 250,000 people that own those buildings. And I make a lot of calls, but I can't call 250,000 people. So it's important for people to know who you are. I tell folks everything you do creates a brand around who you are, the way you do business, the way you talk, the way you dress, the way everything that you do creates a brand. And that's really important because at the end of the day, people deal with people. They don't deal with companies. That is something I think definitely creates value. And I tell young people, create a brand in yourself, create expertise in yourself. And when you have that and you do that, then your company needs you more than you need the company. And that's an advantageous position to be in because you don't want to have to be at the whim of what your company decides to do. And that's a great way to create value in yourself.
Love that. I think something that you kind of hit on as well is, in all of this is the culture that you build. And so many people talk about culture, but they don't live it themselves oftentimes. A couple of mentors of mine, talk about being kind and generous and humble. And I think about you and I think, you spend your time, you could be ruthless. And you may be for your clients, but you're also kind. You're also humble and you're very generous with your time. I will ask you this is how do you think about, all these, I think there's a number you gave, like over 200 times a year, you go to over 200 events a year is your goal? Because there's can you share that number in the statement?
Sure. 261 networking events a year. And that's because there are 261 working days a year, or at least working days for the typical work day. I think, generally we're still working 7 days a week, rightly or wrongly, but that's, selling buildings to me is a job and a hobby. So I could literally do it around the clock. But 261 is and has been the the goal for networking for decades.
To follow up on that, is there ever a type of customer, as you think about the type of people you work with, you shared a great story. What about the people, has there ever been a customer or a type of person you've turned down working with?
No, there are only two people, and talking about 40 years and 2,300 transactions and everything else. There are only two people in New York I won't do business with. One, because he was a brutal retrader, just agreed to a deal three separate times and then kept changing his mind, and both the buyer and I got fed up with him, so I won't work with him anymore. And then another one who did something completely outrageous that I've let go by the boards and not get into detail, but just two people that I won't work with. But other than that, there's all different types of personalities and types of folks in our business. And, you have to do the best you can to get along with everyone.
Bob, tell us about the deal that got away from you. The deal that you haven't closed. One of the the deal that you regret the most not closing.
Oh gosh, you know what, Adrian, I will tell you that as much as I love the successes and the deals that go well, I remember so many of the bad deals, much more so than the ones that actually sold. I could go into hundreds of them, but I think I want to get back to what Chris was talking about corporate culture and the way people deal with each other and the type of environment that you try to create, because I think that's so important. One of the things that I think led to the success that Massey Knakal had was that we ran the business truly with a servant leadership mentality and management style. We invested very, very heavily in the training of our people. They knew that we cared about them. They knew that we wanted them to do better than we did, and demonstrated that by doing a couple of things. One, investing very heavily in them, both initial training and continued training throughout the year, and building their self-esteem. It's amazing what you can get out of somebody when you're constantly reinforcing and rewarding good behavior and positive behavior and things like that. And we did that. Of course, everyone does that with their top producers. They want their top producers to be happy and stay, but we did it with everybody up and down the line, right down to the receptionist and the guy that ran our mailroom. Back in the old days before email became so prevalent, we were sending out over 3 million pieces of hard mail a year. And so we had somebody who was just dedicated to running that mailroom. And, we would occasionally go down there and say, "Hey, Harold, just want to let you know you're doing an unbelievable job." He'd have all the mass mailings lined up perfectly. And he figured out how, well, if we put all the zip codes together, we can save 3 cents a piece, and, all these things. And when we go down and tell him what a great job he was doing, you could see the pride just bubble up inside of him. And he made sure for weeks after that, everything was done absolutely perfectly. And because of that, we created an environment that helped people do better than probably they even thought they could do. There's a lot about the Massey Knakal legacy that I'm very proud of. From 2001 to 2014, the number two company in New York had sold about 1,300 properties. We sold over 4,000. So we lapped the field by more than 3 times for 14 years in a row. Show me anywhere else that's happened in the United States in any sector of the real estate business. We started a firm with the two of us and a secretary in 800 square feet, and grew it to 250 people, sold it for $100 million. I'm very proud of a lot of the things that we did, but the thing that I am absolutely the proudest of is that because of, and I really believe it was because of the management style that we implemented, that today in the New York City investment sales world, there are 31 companies or divisions of companies that are owned by or run by people that learn the business at Massey Knakal. And that is by far and away the legacy that I'm most proud of. And it all gets back to the corporate culture and the management style that we implemented.
Absolutely love it. Every time I talk to you, Bob, it's a pleasure. We appreciate you taking the time with us and our audience. And I know many people are going to watch this on replay. But if you're not following Bob, by the way, Bob is one of the best storytellers. And you're sharing on X, you're sharing on LinkedIn, you're sharing videos, you're even doing comedy. I love that video of jumping in the pool or the hot tub with the suit on. I mean, I love it. And I think I love to find people who are spiky and passionate about something so powerful. So really appreciate you sharing your time. I feel like you're a mentor to me because I get to learn so much from you and to many others. But keep on going. I'm so excited to see what you're up to this year. And hopefully I'll get to see what's maybe a highlight of an event this year that we should all maybe look out for, either in New York or somewhere else. We should try to make some time.
Well, I'm headed Sunday. I'm headed down to South Carolina for the Real Deal event, Future City, which is always a great one. My good buddy Don Tepman, the strip mall guy, and I are having the commercial real estate gala on May 1st here in New York. That's going to be a great one. But there's always something going on. And I think anytime you get a chance to hang out with real estate people and talk real estate, it's a great day. So always happy to participate in those things.
Thanks again, Bob. Thank you all for watching today. Hope to get you back here on the next one. Also want to thank our sponsors for making this broadcast possible. They are Kairos and Coastal Painting Contractors. Until next time, have an amazing afternoon, y'all.